All right, let's dive into this. A Random Walk Down Wall Street by Burton G. Malkiel.
Oh, a classic.
Yeah, this book's been around forever, it seems like, and for good reason, right? It's really approachable.
It really is.
It's not like reading a textbook,
Yeah,
which some finance books feel like.
absolutely.
So I'm excited to dig into this with you.
Yeah, me too.
And so let's talk about the core concept here, right?
Yeah.
What is he trying to do with this book?
Well, he's really trying to demystify investing for the average person.
Okay.
And that's what makes it so appealing. He takes all this complex stuff and breaks it down into these simple core principles that anyone can grasp.
Yeah. I like that it's for everyone.
Yeah.
Right? It's not just for people who have MBAs or who work on Wall Street.
Right.
It's like, hey, if you're just a regular person, you can still understand this stuff.
Exactly.
And grow your wealth, right?
And grow your wealth.
Yeah, which is, I mean, who doesn't want to grow their wealth, right?
Of course, yeah.
So yeah, one of the most interesting ideas from the book, I think, is this concept of the random walk.
Oh, yeah. This is a big one.
Which is kind of a mind-blowing idea if you think about it, right?
Absolutely. Malkiel really throws down the gauntlet here.
Yeah.
He's challenging this whole notion that you can predict what the market's going to do in the short term.
Right.
He's basically saying it's like flipping a coin.
Right. Yeah.
You might guess right a few times, but over the long run, it's all chance.
So are you saying that all those like day traders out there and people who are like looking at charts and trying to find patterns are...
They might get lucky sometimes.
Yeah.
But Malkiel would say they're not really going to consistently beat the market.
Yeah.
It's not about timing the market.
Wow.
It's about time in the market.
Ah, okay.
That's a key distinction.
That's a good distinction.
Yeah.
Okay. So if we can't predict what's going to happen in the short term, what can we do?
Well, that's where chapter 2 comes in, the firm foundation theory. And this is where Malkiel kind of shifts our thinking.
Okay.
He wants us to think like homeowners, not house flippers.
Okay. I like that analogy.
Yeah. So instead of trying to make a quick buck by jumping in and out of the market, we should be focusing on the long-term value of our investments.
Okay. So dig into that a little bit. Like, what does it mean to think like a homeowner when it comes to investing?
So imagine you're buying a house, right? You're not just going to look at the paint color.
Right.
You're going to look at the foundation, the structure, the plumbing, the roof, all the things that make that house a solid investment.
Right.
So when it comes to investing, we need to do the same thing with companies.
Okay, so you're talking about like looking at their financial statement.
Exactly. We're talking about looking at their earnings, their potential for growth, their management team, their competitive advantage in the market.
So their intrinsic value, basically.
Yeah, exactly. We need to understand what that company is really worth.
Because at the end of the day, a stock is just a tiny little piece of ownership in a company, right?
It is.
So if the company isn't doing well,
right,
that stock isn't going to be worth much.
Exactly. So we need to focus on the fundamentals.
All right. So we're looking at the fundamentals. But does Malkiel think that market psychology plays any role in all of this?
Absolutely.
Yeah.
In fact, he dedicates a whole chapter to what he calls the castle in the air theory.
Okay, that sounds interesting.
Yeah, this is where he explores how emotions and perceptions can sometimes drive prices away from that intrinsic value.
So it's like, even if a company is solid,
yeah,
the stock price can still go up or down based on just people's feelings.
Exactly. It's like, remember those fidget spinners?
Oh, yeah.
Everyone went crazy for them.
Totally.
The price went through the roof. But was there really that much underlying value there?
Not really. No.
All right. So Malkiel is warning us to be careful about getting caught up in those kind of speculative frenzies.
Okay. So we need to be aware of our own emotions.
Yes.
And then also be aware of the kind of overall market sentiment.
Right, because that can drive prices up.
Yeah.
Sometimes to ridiculous levels.
Okay, so we need to be level-headed. We need to look at the fundamentals.
Yeah.
And we need to be aware of this kind of market psychology.
Absolutely.
So, with all that in mind, let's talk about some historical examples, because Malkiel talks a lot about market bubbles.
Well,
right?
yeah, he dives deep into the history of bubbles.
Yeah.
It's a cautionary tale.
Right, like what can we learn from these past bubbles?
Well, he looks at everything from the tulip mania in the 17th century
Wow.
to the dot-com bubble of the late 90s. And what's striking is that even though these events are separated by hundreds of years, they have a common thread.
Okay, what's that?
This disconnect between price and value.
Okay.
It's all fueled by speculation
Yeah.
and herd mentality.
So people get caught up in the excitement.
Yeah, they see prices going up and they think it's going to last forever.
Right.
But eventually reality sets in. Yeah.
And that's when the bubble bursts.
So are you saying that stock prices always eventually come back down to earth? Well, Malkiel would argue that in the long run, stock prices are tied to the performance of the underlying companies.
Yeah.
So if a company isn't generating real value, its stock price can't stay inflated forever.
Okay, that makes sense.
And those bubbles are a prime example of that.
Of the disconnect between the hype and the reality.
Exactly.
All right, so we've talked about trying to time the market.
Yeah.
We've talked about emotions.
Yeah.
And we've talked about these bubbles.
Right.
So what tools does Malkiel give us
to
actually navigate this crazy world of investing?
Well, that's where we get into the nitty-gritty of stock analysis.
Okay, let's get into it.
Chapters 5 and 6 are all about technical and fundamental analysis.
All right, so remind me, what's the difference between those two?
So technical analysis is all about using charts, patterns, to try to identify trends in the market. Whereas fundamental analysis is more about digging into a company's financial health.
Okay, so looking at their balance sheets.
Exactly. You're looking at their earnings, their debt, their assets, all those things that give you a picture of how strong the company is.
Okay, so one is more about like looking at the past, trying to predict the future, and the other one is more about looking at the present and trying to understand the underlying value.
Exactly.
Okay, so does Malkiel say that we should be using these tools to try to beat the market?
Well, that's where it gets interesting.
Okay.
He doesn't present these as like foolproof ways to beat the market.
Oh, really?
Yeah, he actually argues that the market is remarkably efficient at incorporating all available information into stock prices.
So wait, you're telling me that no matter how much research I do,
it's tough.
I can't really gain an edge?
Well, he introduces this concept called the efficient market hypothesis. And it suggests that it's really hard to consistently find those undervalued stocks because the market is so good at absorbing new information and adjusting prices accordingly.
That's kind of a bummer, honestly.
Yeah, it can be humbling.
Right. Like I thought it could be like smarter than the market.
Well, a lot of people think that.
Right. But it sounds like Malkiel saying, not so fast.
Yeah, it's not that easy.
Okay, so if it's so hard to beat the market, what's a smart investor to do?
Well, that's a great question, and that's where we'll pick up in the next part of our deep dive.
Oh, man. Now I gotta wait.
You gotta wait. We'll get into Malkiel's surprisingly simple yet powerful approach to investing for the long haul.
Okay, all right. Well, I'm on the edge of my seat here.
I know.
All right, well, we'll be back soon to continue our deep dive into a random walk down Wall Street.
So where we left off was this idea that it's really tough to beat the market, right?
Yeah, I'm still kind of reeling from that, honestly.
It's a tough pill to swallow for a lot of people.
Right. Like, I thought I could outsmart everyone.
Yeah.
But Malkiel's like, nope, not so fast.
The market's pretty darn efficient.
Okay, so if we can't beat the market, what are we supposed to do?
Well, that's where Malkiel lays out a surprisingly simple yet powerful approach.
Okay, I'm all ears.
Diversification and index investing.
All right, so diversification, I kind of get that, right? Don't put all your eggs in one basket.
Exactly. You want to spread your investments across different asset classes.
Okay.
Like stocks, bonds, real estate, maybe even a sprinkle of commodities.
So if one area is doing bad, the others can kind of pick up the slack.
Exactly. It helps smooth out those ups and downs.
Okay, makes sense.
And it reduces the risk of any single investment wiping you out.
Right.
It's like having shock absorbers on a bumpy road.
I like that analogy.
Yeah, it helps you ride out those bumps a little more smoothly.
Okay, so diversification, check.
Check.
What about index investing? Why is that so special?
So instead of trying to pick individual stocks...
Which is what a lot of people think of when they think of investing, right?
Right, but Malkiel argues that trying to pick winners and losers is a losing game in the long run.
Oh, really? Even for, like, professional stock pickers?
Even for the pros, it's tough to consistently beat the market.
Okay, so he's saying just buy the whole market.
Essentially, yeah.
How do you even do that?
That's where index funds come in.
Yeah.
They track a broad market index like the S&P 500.
So you're buying a tiny piece of, like, 500 different companies.
Yeah. You're essentially betting on the overall growth of the economy.
Okay, so it's like, instead of trying to pick one horse in a race...
Yeah.
You're betting on the whole field.
That's a great way to put it. You're diversifying your bet.
Makes sense.
And historically, index funds have actually outperformed many actively managed funds. especially after you factor in fees.
Okay, so I'm getting lower fees, and I'm more likely to, like, match the market's return.
Exactly. It's a simple, low-cost way to participate in the market's growth.
Okay, so diversification index funds. Got it.
Got it.
But we're still human, right?
Oh, absolutely. And Malkiel doesn't shy away from that.
So how do we deal with all the emotions that come up when we're dealing with money?
Well, that's where behavioral finance comes in.
Okay, he talks a lot about that.
Yeah, he dedicates a whole chapter to it.
So what's the gist?
He basically says that our emotions can really sabotage our investment decisions.
Okay, like how so?
Well, we might sell our investments out of fear when the market drops.
Oh yeah, I've definitely done that.
Or we might chase after hot stocks that are soaring in value.
Okay, I've done that too.
Even if they're not fundamentally sound.
Yeah, yeah.
So he gives us some strategies to deal with these biases.
Okay, like what?
Well, first of all, just being aware of them is huge.
Okay, so just knowing that I'm prone to making these emotional decisions.
Exactly. Once you're aware of it, you can start to develop strategies to counteract it.
So, like, what kind of strategies?
One of the simplest but most effective strategies is to have a written investment plan.
Okay, so, like, not just having it in my head,
Right,
but actually writing it down.
Exactly. You want to outline your goals,
Okay.
your risk tolerance, your investment strategy.
So when I'm feeling panicky or greedy, I can look at this plan and be like, okay, this is what I'm supposed to be doing.
Exactly. It keeps you grounded.
Okay, that makes sense.
It helps you avoid those knee-jerk reactions that can really hurt you in the long run.
Yeah, yeah.
And it's a good reminder that investing is a marathon, not a sprint.
Right, patience, right.
Patience, consistency, discipline.
Not the most exciting words.
No, but they're essential for long-term success.
Okay, so written plan, patience, what else?
Well, Malkiel also talks about the importance of minimizing investment costs.
Okay, yeah, fees, right.
Fees can eat into your returns over time.
Oh, this is like sticking with those low-cost index funds.
Exactly. And also paying attention to things like expense ratios.
Okay, so being a savvy consumer.
Yeah, you want to make sure you're not overpaying for your investments.
Right, right.
And he also stresses the importance of tax-efficient investing.
Okay, so like what does that mean?
Well, taking advantage of tax-advantaged accounts like 401ks and IRAs.
Okay.
So you can minimize your tax burden and let your investments grow more effectively.
So it's not just about how much money you make.
Right.
It's about how much you get to keep.
Exactly. Tax planning is a crucial part of any sound investment strategy.
Okay, got it.
You know, what I really appreciate about Malkiel's approach is that he doesn't try to make investing seem like rocket science.
Yeah.
He shows us that it can be simple.
Right.
And understandable.
And accessible.
Exactly. It's about making informed decisions.
Yeah.
And building a solid foundation for your financial future.
But the world is changing so fast, right?
It is.
I mean, Malkiel wrote this book a while ago.
Yeah.
So if he were to update it today, what do you think he'd add?
Well, you know, the world of investing is constantly evolving.
Yeah, for
You
sure.
know, technology's changing everything.
Yeah.
So if Malkiel were updating the book today, I think he'd have a whole chapter on cryptocurrencies.
Oh, yeah, crypto.
It's the elephant in the room, right?
Right. You can't really talk about investing these days without at least mentioning it.
Exactly. And I think he'd dive deep into, you know, the blockchain technology.
Yeah.
The potential of decentralized finance.
Right.
And, of course, the volatility.
Yeah, that's the thing that scares me the most about crypto.
Yeah, it's a wild ride.
For sure.
But I think he'd encourage investors to approach it with a critical eye.
Okay.
To look beyond the hype.
Right.
And to really understand the risks and potential rewards.
Yeah, because it's easy to get caught up in the hype, right?
Oh, absolutely. Especially when you see those headlines about people making millions overnight.
Yeah, yeah.
But Malkiel's always been about, you know, data-driven decision-making.
Right.
So I think he'd say, do your research. Understand what you're investing in.
Don't just blindly follow the crowd.
Exactly.
Okay, so crypto, what else? What other new chapters do you think would be in the updated version?
Well, ESG investing has really taken off in recent years.
Yeah, that's true.
You know, investors are increasingly looking to align their investments with their values.
So, considering environmental, social, and governance factors.
Exactly. It's not just about financial returns anymore.
Right. It's about making a positive impact.
Right. So I think Malkiel would definitely dedicate a chapter to this growing trend.
Okay. And what about artificial intelligence?
Oh, yeah. AI is transforming everything.
Right, including investing.
Absolutely. I mean, we're already seeing the rise of robo-advisors and algorithmic trading.
It's kind of scary, honestly, to think about, like, computers making all the decisions.
Yeah, there are definitely some ethical considerations there.
For sure.
But I think Malkiel would acknowledge both the potential benefits and risks of AI in investing.
Okay, so he'd be cautiously optimistic, maybe.
Yeah, I think so. He'd probably emphasize the need for human oversight
Okay.
and the importance of transparency in these algorithmic models.
Right, because we don't want to just blindly trust the machines, right?
Exactly.
Okay, so crypto, ESG, AI, anything else?
Well, we've also seen this huge surge in retail investing.
Yeah, that's true.
Every day people are getting more access to the markets.
Right, thanks to online platforms and things like fractional shares.
Exactly. So I think Malkiel would stress the importance of financial literacy for these new investors.
Okay, yeah, that's crucial.
Because it's easy to make mistakes if you don't understand the basics.
Right.
So he'd probably encourage them to, educate themselves, to seek out reliable sources of information, and to avoid those get-rich-quick schemes.
Right.
Because those rarely end well.
Okay, so it sounds like even though the investment landscape is changing, Malkiel's core message remains relevant.
Absolutely. It's about, focusing on the long term.
Right.
Diversifying your investments, being patient, being disciplined.
And staying informed.
Exactly. Knowledge is power, especially when it comes to investing.
Well said. Well, I think this has been a really insightful deep dive into a random walk down Wall Street.
It's a classic for a reason.
It is. So much wisdom packed into that book.
Timeless wisdom.
Yeah, and I think it's a great reminder that investing doesn't have to be complicated.
Yeah.
It's about sticking to the fundamentals.
Absolutely.
And making informed decisions.
And being patient.
Yeah, patience is key.
It is.
Well, thanks for joining me on this deep dive.
It was my pleasure.
And to all our listeners out there, keep learning, stay curious, and remember the best investment you can make is in yourself.